The U.S. job market shows remarkable strength, with 147,000 new positions created in June, a brighter spot amidst economic fluctuations. Despite plenty of uncertainties affecting the economy, employers still managed to create nearly 150,000 jobs last month, reflecting a pace of job creation not far off from the strong numbers of May. The latest report from the Labor Department revealed that the unemployment rate slightly decreased to 4.1%, thanks to many workers leaving the workforce entirely. This figure remains close to historically low levels, demonstrating the robustness of the labor market. Notably, the actual number of jobs added came in ahead of expectations, outstripping the forecasted growth of 110,000 new positions. Although job creation this year has been slower than last year's burst of hiring, trade barriers, elevated interest rates, and recent governmental budget cuts have not significantly derailed the labor market's progress. That said, hiring has nearly ground to a halt in several sectors beyond a few notable industries. Interestingly, hourly earnings saw a modest increase of 0.2% in June, contributing to a total annual rise of 3.7%, which has comfortably outpaced inflation rates and given American consumers more financial breathing room. The pace of layoff remains low, and job openings rose in May, according to another report from the Labor Department. However, economists anticipate that the pace of job growth may slow down as the months progress. Daniel Zhao, the chief economist at Glassdoor, observed, "The job market has shown impressive durability, especially since the pandemic. But let's be cautious. There are subtle signs of softness beneath the surface." The Trump administration highlighted the positive jobs numbers as proof that its America First approach has spurred tremendous growth and prosperity for American workers. Meanwhile, the House is set to vote on President Trump's significant tax and immigration bill, which is expected to finalize soon. Though Wall Street traders expressed cautious optimism about potential interest rate cuts following the June jobs figures, the Federal Reserve may find little justification to lower borrowing costs, as the job market continues to demonstrate stability. Federal Reserve Chair Jerome H. Powell has indicated that the Fed stands ready to act if the labor market faces a decline. In June, a significant portion of new job creation stemmed from state and local governments and the healthcare sector. Public education at the state level added 73,000 jobs, while healthcare facilities, including hospitals and nursing homes, created 39,000 jobs to meet the needs of an aging population. Social assistance roles increased by 19,000 positions. Construction saw a growth of 15,000 jobs, and the leisure and hospitality industry employed 20,000 new people, a figure that marks the slight reduction from earlier months. Industries sensitive to tariffs, such as retail and transportation, added minimally to the job count, while manufacturing saw a reduction in jobs. White-collar positions have also shown slower growth, and new college graduates face increasing unemployment rates. Interestingly, adjustments to earlier job figures revealed an upward revision of 16,000 positions over April and May, addressing some concerns about the market strength. However, there are emerging signs of fragility, such as a shrinking labor force by about 130,000 people in June. The number of long-term unemployed also grew by 190,000 to 1.6 million. Economists point out that reduced hiring can impact the job market just as much as layoffs. A contraction in the labor force might be influenced by strict immigration policies under the Trump administration, which include tighter border controls and increased worksite inspections. A recent Brookings Institution report notes that the United States could see net zero or negative migration by the end of the year, meaning more people might leave than arrive. A potential shortage of immigrants could drive up wages, create challenges in certain crucial industries, and pose a dilemma for the Federal Reserve to interpret the labor market's health accurately. Zhao stresses, there's a higher risk of policy mistakes if interest rate cuts are delayed. As the labor market weathers smaller job additions, the workforce's precise size remains a complex parameter to measure in real time. There are headwinds across several major industries. The tax and immigration bill awaiting passage includes significant Medicaid cuts, potentially leading to reductions in healthcare roles and hospital staff. Moreover, the federal government has lost approximately 69,000 positions since January due to significant layoffs at major agencies like the Department of Health and Human Services and the IRS. Finally, industries reliant on imports are bracing for greater challenges as trading restrictions continue to rise. Local retailers like Willie's Ski and Board in Western Pennsylvania are adapting by limiting their seasonal hiring. Co-owner Kirsten Klein shared, "The tariffs pose a significant challenge for a small business. Increased costs inevitably lead to reduced demand, impacting our revenues and customer footfall."